Welcome to our explainer. So, just when everyone thought the party was over for Tokyo real estate, the market came roaring back. Today, we're breaking down the surprising rebound that has everyone talking. You know, the big question on everyone's mind earlier this year was pretty simple. Was this it? Had Tokyo's 5-year property boom finally hit a wall? A slowdown over the summer really had analysts and buyers worried. The music had stopped.
But then the autumn data came in and, wow, it delivered a really powerful answer. Residential land prices in the Tokyo area didn't just stabilize, they shot up 1.3% in a single quarter, a huge comeback.
So how did we even get here? Well, the market's journey through 2025 tells this fascinating story of doubt and then renewed confidence. This chart really captures the whole V-shaped recovery perfectly. You can see it, right? A strong spring, and then that significant summer dip, which caused some real concern. But the autumn rebound wasn't just a small bump. It was a full-on return to the peak growth we saw at the start of the year. And you know, that summer dip felt very real at the time. The data was showing that fewer areas were seeing prices go up, and more were actually seeing them go down. A lot of people looked at this and thought, yep, this is it, the peak is here. But the autumn numbers just completely flipped that script. The data showed a really decisive turnaround. It looks like all those buyers who were hesitating, taking that wait-and-see approach during the summer, they all decided it was time to jump back in. And that just reignited the market's momentum. But here's the thing. This rebound isn't just a story about central Tokyo. The growth is actually expanding outwards, creating this powerful ripple effect all across the entire metropolitan area. Now, the engine room for this whole rebound is still Tokyo proper. 23 wards and the western suburbs. They both saw this incredible growth of over 2%. And this is really fueled by two different groups. You've got wealthy investors still pouring money into high-value central properties, and then you have families looking for more space out in the suburbs.
And if you look just outside Tokyo, in places like Kanagawa and Saitama, the growth isn't quite as explosive, but it's incredibly steady. And that's a great sign, actually, because it shows the market is supported by real, practical demand from people commuting into the city, not just speculation.
But the biggest surprise this quarter, the area with the most, let's say, noteworthy movement, wasn't Tokyo or Kanagawa. It was Chiba Prefecture, which has gone from basically being flat to one of the most dynamic parts of the market. And this is that ripple effect in action. Chiba's price growth accelerated to a full 1%. Why? Well, as prices in Tokyo and Kanagawa keep climbing, buyers are looking for the next affordable option. And it looks like they found it in Chiba. Okay, so as strong as the Tokyo market is, it does raise a surprising question. Is it even the hottest market in Japan right now? The data suggests we should probably be looking west. And here's the twist. The Kansai region, which is home to cities like Osaka and Kyoto, actually posted slightly higher overall growth than the entire Tokyo metro area, coming in at 1.5%. The demand for housing there is just incredibly solid. So what's going on there? Well, the whole region's average is being supercharged by one prefecture in particular, Kyoto. It saw a massive 3.1% increase in land prices, basically pulling the entire Kansai region's numbers up with it. So this brings us to the most important question of all, right? What fundamental forces are actually fueling this resilient and widespread growth across Japan's biggest urban centers? So what's keeping the market so hot? Well, it really boils down to a simple two-part answer. First, money is still cheap to borrow, with mortgage rates staying at historic lows. And second, with inflation eating away at people's savings, real estate is seen as a tangible, safe place to put your money to protect its value.
Okay, so the market looks solid for now. It's a story of a strong rebound and growth that's spreading out. But what does the future hold? What challenges are kind of looming on the horizon?
Looking ahead, experts are watching two wild cards. The first is monetary policy. If interest rates finally start to rise, borrowing gets more expensive, and that could really put the brakes on buyer demand. The second is the rising cost of construction, which means the price of new homes will likely keep climbing no matter what the central bank does. So while the immediate outlook seems pretty firm, these factors leave us with a final, crucial question. The market managed to navigate that summer slowdown for sure, but its next big test could come from rising rates or from rising building costs. So, which one is going to write the next chapter in Japan's real estate story?